The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 25th Marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and hopefully everybody out there had just simply an incredible weekend. Great to be back with you. I absolutely treasure your presence here today, folks, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call a life of abundance. You know, wealth, folks, it's a word that conjures up a wide variety of images, and that really is my outcome for providing each of us with the tools that we need in order to lead an inspired life. Because that is where dreams are. That's where inspiration comes from, and that is where true incentive is born. You know, to one person, wealth means having enough financial substance to be able to do whatever you wish for your life. Maybe to another, it means freedom from debt, and someone else, well, might just simply define wealth as opportunity. You know, there is a wealth of experience, there's a wealth of friends, a wealth of love, the wealth of family, the wealth of culture, and on and on and on. The key is to decide for yourself what wealth means to you. Latch on to your own mental image and put together a plan to increase your wealth. And folks, you will live a life of abundance. Let's go check out these markets. Let's go see what we've got going on here. Let's take a look at the wealth in the markets. We've got the Dow futures up 62 points right now, traded out at 14,043 over the highs right now of last Wednesday, February 20th. You've got the S&P up 8 points out at 1522. NASDAQ futures up almost 19 points right now out at 2754. The Russell 2000 trading out at about 920 right now. King dollar pulling back down about 27, back about 27, ticks out at 81.31. Gold up $12 out at 15.85. Silver up 45 cents out at 28.92. Light sweet crude up 62 pennies out at 93.74. Across the pond over in Europe, they're having February Fest, Oktoberfest, celebrated a little bit early. You've got the DAX up 2.5% right now, up 183 points. The FTSE up 28 points. That's up 0.4% over in Asia last night. The Nikkei closing up 276 points, getting above its 1.618 butterfly expansion out there. We'll take a look at that. The Hang Seng was up 37 points. That was really kind of a flat market for the Hang Seng, up maybe less than 0.2% out there. And the Shanghai up 0.5%, up 12 points. Our call-in number is 877-927-6648. Let's start out by taking a look at the euro. So we take a look at the euro here because that's what's really putting a pretty big pop in the market, both the euro and the pound. So we'll start off taking a look at the currencies. I've got the 30-minute euro chart up on the screen. What we can see that it has done here on the 30-minute chart, this is coming into the time frame here of 8:30 this morning, made a nice 0.618 retracement. The exact number on the 0.618 would be 133.226. The euro actually got up to 133.174. Did it and created this little shooting star candle. Now, the shooting star candle, folks, it's the opposite of the hammer. You would see this up at high. So you've got some pretty decent resistance at that sweet 618 level. Also at the top of that hammer, again, that price 133.174 out there. You then had a bearish engulfing candle on this very next session. That's the 8:30 to 9 a.m. session. And quite frankly, what it also set up was a three-river evening star out there. So we got a couple of reversal candles out here. This is the 30-minute chart that we're looking at, and we'll see if that area will hold as resistance. We know that is a normal level that any market would bounce back to. It would be sweet 618. We can also see on the 30-minute chart here the euro moving into the extreme overbought territory. If we flip this over to a daily chart, let's go see what's going on the daily chart out here. Now, what you will take notice of here is I've got several patterns drawn in. You've got the pattern right here. If you're taking a look at it, if you're listening on the radio, or maybe you're listening in on your mobile device because you are listening in on tfnn.mobi, thanks so much for doing that. Remember, the live stream of this show can be obtained by just simply going to the homepage of tfnn.com. Over on the right-hand side, you'll see the button that has the three little smartphones. Click on that. You'll catch the live stream of this. That way you'll be able to see the charts on my screen. And if you can't do that, just simply catch the archive of this on Channel 9 on TigerTV. Now, what we're taking a look at here are really two different patterns out here, two different 0.786 Gartley buy patterns. What the euro did here, what the euro did on Friday, was it made the smaller 0.786 Gartley buy pattern as it moved down into the low of 131.442. Now, 0.786 retracement that we're looking at is coming off of the swing point low from January 4th out there. So that's from the low of January 4th all the way up to the high that was put in on February 1st. Makes a 0.786 retracement, makes an A to B equals CD down. Now this is a candle formation that we have here, this little three cluster. Remember on the 30-minute chart at the top we were taking a look at a evening star formation. This, folks, is a morning star candle formation out here, setting up some pretty decent support now for the euro down at that 131.442. Now, what would you expect here? Well, if we take a look at just simply a normal bounce, we're going to go from the A to the D point. The A point here on the euro is all the way up at that February high, all the way down to the low put in on Friday. A normal bounce out here would be a dead cat, a 0.382 level. That would get you into 133.603. If, in fact, the euro will move up to that level, we'll see some continued weakness in the dollar. That would put some strength in the marketplace. Of course, what you also see here, if you're looking at us on Tiger TV, you've got this little red descending tops line out here that has been holding the euro in check. And we can see that price moved all the way up to the top of that before it turned away. Now, what's really on store for the euro? I think what's on store for the euro is the larger 0.786 Gartley buy pattern. That will take the euro down to the 128.870 level. That is coming off of the November 13th low all the way up to the high that was put in on February 1st. If we go switch over and we take a look at the King, let's go see what the King is doing. King dollar out here trading out at 81.28 right now. And the King, this is going to be an important trading session for the King. You can see the black horizontal line going across my screen here. That is an area that really is held as a resistance point. You can see that the U.S. dollar index got up above that on Friday, closed up above it, gave it up so far this morning. You've got a reversal candle. In fact, you've got a key reversal candle out here. Key reversal says that you, in essence, open above where it had closed its session on Friday. Well, certainly it did that in this morning's early or last evening's trading out there. So you have that. You also have an extended condition. Well, if you take a look at the daily chart, just simply using that relative strength indicator, we can see that the U.S. dollar index had moved into the overbought territory. That says that it wanted to pull back. And then what you would finally have today is you would have a close in the opposite direction. Now, there's one other thing that you need, which is intraday, both the high and low of the prior session would need to be pierced, and that is already taking place. If you take a look at the high from Friday out there, you'll see that high was 81.70. So far today's session, the high has been 81.75. The low of Friday's candle out there, that low, 81.26, and so far intraday, we've already exceeded that. So we have all the conditions set forth here in order to have a key reversal day on the U.S. dollar index. However, not so fast, as Lee Corso likes to say on game day out there. If you take a look at where is a support area for the U.S. dollar index, it's going to be that red horizontal line. That horizontal line was set up by the gap down from November 21st. So November 21st gap down into that 23rd candle out there. That red horizontal line acted as a very strong resistance area. And, of course, the U.S. dollar index looked at that and said, see ya, don't want to be ya. It moved up over that. When you move up over a old resistance level, it becomes what? That's right. It becomes new support. Therefore, it is not unusual for that support level to be tested, I should say. And so what you wanted to take a look at is the key area here now, $80.94. You get the U.S. dollar index to pierce and close back below that level. That says it couldn't bust them up. And what the U.S. dollar index will do is go bust them down. And then we will see the markets break out to the upside here. If we go take a look at the daily contracts on the futures contracts, let's go start off and let's take a look at the ES Mini. As we take a look at the ES Mini, we can see the high being put out here on Wednesday. That was when you got out to the level of 1530. If we take a look at retracements from that 1530 down to the low that was put in on Thursday, what you will see is 1522.51. That is the 0.786 retracement. Right now, the ES Mini trading out at 1522 out there. If it can get above 1522, the next level will be a test of that Wednesday swing point. But now let's go take a look at what's going on inside the 30-minute chart on the ES Mini. We already said there that was a 0.786 retracement, so that already gave you an idea of what we were going to look at here. On the 30-minute chart, we're seeing the 0.786 Gartley sell pattern. That Gartley sell pattern creating a shooting star candle here at about 7 o'clock this morning. If, in fact, the the ES Mini gets above this 1525 level, it will run up to 1530. However, and you can see here, overbought at this stage, trying to work that way off, but we've got the fight going on between the bulls and the bears out here. Here's the cautionary sign, because we have traveled sideways for the last several hours here in the ES Mini. That's setting up a resistance area here at that 0.786 level. If this area fails, yes, it'll make a 100% move of a move. It'll get back to the highs, but what it will more likely do, because if you have a 0.786 Gartley failure out there, in this case here would have been a Gartley sell, it'll turn into a butterfly more often than not. Where's that butterfly take you to? Takes you to the price point objective of about 1540 in the ES. But first things first, you've got a 0.786 Gartley sell pattern. If we go back over into the dailies, let's go take a look at the Dow futures. Why the Dow futures? Because the Dow futures on Friday just simply said, I don't care about your resistance levels out there. I'm going to go ahead and take them on. And that's, in fact, what the Dow has done. If we take a look at Dow futures up and over that February 20th high, that number was 14,035. Right now trading out at 14,038. So just slightly above that level. The high so far intraday, 14,048 out there. If we go take a look at the NASDAQ futures, let's go take a look at some weakness in the market. Let's go see what the NASDAQ has done. Just simply take a look at that same retracement off of that high from February 20th down to the low. What you'll see is the NASDAQ is visiting us here in sunny Clearwater. What we've got is Sweet 618 is 2753.25. Right now, you've got the NQ trading out at 2754.25. 877-927-6648. Give us a call, folks. We'd love to hear from you. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Let's go peek in on some of these charts here around the world. Let's start taking a look at the Nikkei out here. Now, what I've got up on my chart here, if you're watching us on Tiger TV, is the Nikkei. It's the daily chart of the Nikkei. We can see it truly into the extreme overbought territory, and the lines that you see on my screen, I don't know if you can read them out. If you were watching us in the den, you would more likely be able to visually see them because that is HD. And, folks, if you haven't had a chance to check out the Tiger's Den, go to the homepage at TFNN.com. You can test drive that for 30 days out there. And it's a great way to see our charts in high definition, let alone you are surrounded by a great group of peers out there, a great group of traders. If we do take a look at the Nikkei here, you can see that it has made just slightly above today or this morning's move up 276 points, 2.5%. As it moved up, but just a little bit over that 1.618 expansion off of the swing points from March 30th. That was the March 30th swing point high all the way down to the swing point low in June of 2012. What we can also see here, it's made a 1.272 expansion of swing points. That's coming off of February 18th, 2011, all the way down to that same low out here back in June. What we can also see is if you come all the way back here into the June 2008 time frame, you'll see that today's price is at a 0.618 retracement. So you've got a number of Fibonacci numbers off of significant swing points coming together at the same area. Oh, how did I forget this? You got sweet 382 out here, a .382, a dead cat bounce retracement off of the swing point highs going back to 2007. Kind of put that in perspective, folks. You know that our markets here in the U.S. are already at those 2007 highs or higher out there. Take a look at the Nikkei out here. The Nikkei only having thus far made a .382 retracement. Absolutely been on fire here over the last several months. But the Nikkei should be up against a pretty significant resistance area out here. Just simply taking a look at the retracements or expansions off of all of those key swing points out here. This is the weekly chart that we're taking a look at. If we go punch down into the daily chart, what I can tell you is that the move higher, it is a move higher, but it is not substantiated. In fact, it looks like at some point, boy, that's really stretching it to say to you at some point in time it's going to crack. When it cracks here, it's not going to be like a little crack in the ice. Looks like it'll take some folks by surprise. I don't know what the reason behind it is, but I can tell you as I watch the move higher here, knowing that on the weekly you're up against some pretty decent resistance areas out there. And when I take a look at the daily chart, this does not scream conviction out here. No, not whatsoever. If we go take a look at the currency pair, take a look at the daily chart of the U.S. dollar Japanese yen here, made quite a high out here back in February 11th as it got up to the 94.44 level. Got just slightly above that intraday here, got up to 94.59, has been slightly selling off ever since. I believe that this high out here is a significant high inside the U.S. dollar Japanese yen, that 94.48. Look, folks, if it does take that level out, then this trend here, regardless of what the stock chart is saying, well, what it will be telling you is you will see it bust through those areas on the weekly chart, and you will see this continuation of this trend underway. It will continue even further out here. If we go take a look at Goldilocks and silver. Right now we've got gold up $13, trading out at $15.85. What's the key to be watching here? Well, number one, you had gold make a 1 to 1.618. A to B equals C to that price projection, $15.53. What gold actually did on Friday, no, it did it on Thursday. My apologies. What it did on Thursday got down to $15.54. $15.54 versus $15.53. You got to love using these numbers out here. You got to love your A to B equals CD patterns. So far, just simply working off the oversold condition out there. Gold still trading with inside this candle right here, this large candle. And so until it breaks above that, you've got to still be somewhat suspect, somewhat cautious on gold out here. It had to work off that oversold condition. That's really all that it is doing right now. If we take a look at silver, really silver doing the same kind of thing. The silver here, how about that? Hi-ho silver making that .786 Gartley buy pattern, doing that on Wednesday last week as it made its way down to the 28.25 cent level. Right now, although this is not a hammer, I'm treating this like a hammer. I'm referring to the January 4th candle out there. That low is 29.24. 29.24 should be some pretty decent resistance. So far, the intraday high is 29.22 out there. 877-927-6648. These markets are going to pop when they open. Dow's going to open up about 57. ES-Mini up 7.5. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're up to the races. We got the Dow up 55 points, composite up 22, S&P's up 8, small caps up 3, Google to the upside up $7.67. That's the leader in the clubhouse. Right behind them, you've got Amgen up $3.58. That's up 4% this morning. Wynn Resorts up 2.5%, up to about $3 right now. Cummings Inc. up $3. That's up about 3% as well. Amazon up $2.80. Deutsche Bank DB, the ticker symbol, up 5% this morning, up $2.40. Las Vegas Sands up $2.35 out there. Occidental Petroleum, OXY up $1.70, Apple up $1.38, John Deere, Deere and Company DE up 1 6/10%, up $1.44. To the downside, truly to the downside here, you've got Affimax Inc. They are a biopharma company out there, just totally taken to the woodshed, off $14. Well, it's not that it's off $14. That's the big deal. That's down 85%. How would you like to wake up out of bed and be down 85%? That would be a stinger out there. That's why you only risk 1% of your trading capital on any one stock out there. Dillard's, DDS, the ticker symbol. They must have been, let's see if they were out with earnings or what is driving that stock lower, off 6% here. Net income of $161 million versus $141 out there. Sales $2.1 billion versus $1.97 So they must be guiding lower out there, getting hammered. Probably some volume behind the move as well. Talk about volume behind the move. 3D Systems, the 3D printer companies here, being taken apart this morning. I bet you there's a part they'd like to print. 3D Systems, DDD is the ticker symbol, down 13%. That's after having volume off of the top on that equity out there. That's off $5. Stratasys not far behind, down 6% this morning, off $4 and change. We'll take a look at those two stock charts. F5 Networks, FFIV off 3.5%, $3.40. Meade Johnson, MJN off $2. ITT Education down 10% this morning. That's trading down $2. Panel, Universal Display, PANL is the ticker symbol. They're off a couple bucks in change. Again, our call numbers 877-927-6648. Let's go take a look at 3D Systems out here. Let me get rid of the A to B equals CD. One of the things that we can take a look at is this stock here, this equity, January 25th out here, makes a high, does it with 5 million shares, actually gets up maybe just a tad higher or right about the same area on January 23rd with 6 million shares. However, what does it do on this trading session? This trading session being January 28th. Talk about distribution. Big time. Volume off of the top. 17 million shares off of the highs there. That, folks, is always a bad sign out there. That is something you do not want to see in any stock that you hold out there. Once you see volume off the top, that means get out of the way. In this case here, you know, it gave you a chance, another chance to get out. The top of that downdraft, the open of the trading session for January 28th out there, $46.14. The equity made it almost all the way back. Gets up to $45.63 on February 7th out there. You know what they say, pigs get fat and hogs get slaughtered. Well, the slaughter is taking place again today. You talk about volume, only been trading for 8 minutes. So far today, 2 million shares in only 8 minutes of trading. Looks to me like it's going to give some competition to the January 28th session that had 17 million shares out of it, gapping down this morning, taking out a B point. That B point only has 8.5 million shares. That sets up a confirmed A to B equals CD down, but it's going to do more than a 1-to-1 A to B equals CD down to 1-to-1. It's already done that. Gap down into it. The next level, $30.44. The level after that, $26.31 out here, already through an area of support, which should have been this rising window from December 31st out here. So this is kind of an interesting stock to look at because, you know, if you just start taking a look at some of the stocks in the marketplace, some of the leaders out there, some of the leaders actually getting destroyed, getting back into that December 31st, January 2nd level and having no problem doing it. Folks, I believe that what we have going on out here in the market is nothing more than some distribution at the highs. Ways to snooker. If you've ever played that game of pool out there, what a great game. Just trying to snooker people in on the market. If you're not long or you're not short, all you need to do is just sit on your hands right now. I suppose sit on your hands. And if you're not long, don't look to get long. Wait for the markets to truly break out above the highs out here. This is perhaps the most beautiful thing about trading and technical analysis right here, right now, is that you've got the backs are really up against the wall as you're up against levels back on the monthly charts from 2007 out there. If there's going to be a breakout, and it's going to break out above resistance areas, you've got time to get back in. But when you're up against these levels here, quite frankly, this is ideal. These are ideal areas to be taking a look at putting on short positions. It doesn't matter. Don't be paying attention to the media outlets out there. Of course, I guess you could consider us a version of a media outlet. Just pay attention to the stock charts. Just pay attention to volumes out here. In the case of 3D Systems, if we go put this on a weekly chart out here, the problem with this is that when you take a look at high volume trading sessions, you know, it's really already below them. I guess the next level, and it's already trading into it, is going to be the November 30th, 2012 level. That high is 32.90. It's trading at 32.60 right now. What 3D Systems should do is come all the way back, at least to on the weekly chart, to the most recent swing point. That swing point really being September of 2012, $21.57. Folks, if you had a nice ride on the Reading Railroad on this one and you were up at the highs, the weekly chart here has got nothing but bearish news written all over it. If you haven't taken your profits, go ahead and do it. go ahead and take those profits now, unless you want to go take a ride on the reading down to $21.57, because it looks like that is where 3D Systems wants to travel to. Let's go take a look at Dillard's out there, department store here in Florida. I don't know where else they are, but I'm assuming some places other than Florida. They're down 7.5% this morning. They are gapping down, and they're doing it with some volume out here. So let's go take a look at Dillard's, see where this is headed to. This is trying to take out a little resistance area, a support area. Here you got this little hammer. Here's a hammer candle. We're looking at the daily chart. This and the ticker symbol, folks, is DDS. The low out there is 78.66. It's trading out at 78.12 right now. You know the saying, when you break a hammer, when you close below a hammer, if you're long, that's right. If you're long, you're wrong out here, and that's what Dillard's is saying. However, it's a daily chart we're looking at, and so you're going to have to wait till you see the close. Now, that hammer candle, volume-wise, only has 526,000 shares. Look out below, timber down there. If we take a look at it, just took another move down, and in 11 minutes of trading, 300,000 shares. So the volume coming out of this thing, this is going to send Dillard's all the way back to its last, at least, breakout area. This area here has sort of been tested. No, it has been tested. Not sort of been tested. And what we're looking at is the gap up. August the 8th, 2012 out there. Let's draw the line across the screen here. You can see it gaps up. Does it with 1.8 million shares. The prior session was 1.3 million shares. This equity came back, tested a breakout area. That's a beauty, isn't it, folks? Tested a breakout area with 320,000 shares. That was back in September of 2012. That is how you like to see a breakout tested. That one is textbook out there, talking about being able to do it on lighter volume of the breakout candle. That's what I would be using is the session before, that gap up. And then the volume that you're really benchmarking it against is really that following trading session, the August 9th level out there, 1.7 million shares. So coming back on only 300,000 shares out there, you get the nice reversal signals here over a couple of trading sessions, October 2nd, as well as October the first out there. How about that? The first and the second. And then it goes ahead. Looks like it probably made an A to B equals CD up. That is in Dillard's. However, this morning here, just truly getting hammered and coming back to that breakout area again. Look at that for A to B equals CD. That price projection, $90.19. It only made it up to $89.98 out there. Dillard's coming back to that breakout area. Unfortunately, it's coming back there with some big volume in the marketplace. Let's go take a look at, let's see, what do we have here popping to the upside? Let's go peek in on Apple, see what Apple is doing, obviously putting some juice into the Qs here this morning. But let's go take a look at the Apple chart, and then we'll take a look at the intraday chart out here. Apple not really doing a whole lot. Volume so far, 1.3 million shares. Let's put this just simply on a 10-minute chart out here. Give me a moment to refresh my screen, make sure that we have all the data. Let's see what we have behind the move here volume-wise. It takes just a minute. While that is working here right now, you've got Google's up $5.83. So in the first get-go, we're looking at a 10-minute chart. Some pretty decent volume behind the bounce up here in Apple. 2.5 million shares in that first 10 minutes of trading. And that's really coming against an area here, maybe some sideways horizontal resistance, but the candle that it's going into only has 1.1 million shares. That's that 940 session from February 20. It says to me that Apple would like to go up and test that high, see what's up there, right around the 457.69 mark out there. That is on the 10-minute chart. Of course, Apple getting into that on the 10-minute chart, getting into that extreme overbought territory. But that's the intraday chart out there. If we take a look at daily, neither overbought nor oversold out here. I suspect what Apple really wants to do and what you want to be paying attention to on the Apple chart is that January 25th candle. That high, 456.23. Trading inside that level says that it really wants to go down and test the lows, $435, before it gives you its next piece of information in the marketplace. Let's go check in again on those 3D printer companies. Let's go take a look at SSYS out there. And then I think there's one called X1, although I'm not sure of the ticker symbol. Maybe somebody in the den knows the ticker symbol. Maybe it's as simple as XONE, but maybe somebody could confirm that. We'll go take a look at that stock chart as well. If we take a look at Stratasys, well, this is not doing a whole lot better than 3D Systems out here. Trading out right now at 62.72, gapping down this morning. If we take a look at A to B equals CD patterns out here, let's go ahead and get rid of this expansion out here. This is a little blue pattern. Let's take a look at what we are currently doing now. If you take a look at volume in here, you don't have wide price spread. Well, you do have wide price spread. It just happens to be to the downside. So my apology. What I'm looking at, folks, is September 18th, 2012, 4.7 million shares. The top of that is 63.59. Already inside there, the low of that is 58.41. So 58.41 written all over this, but most likely even lower. Let's take a look at A to B equals CD. Your A point on this equity is the January 2nd high, 92.30. The low out here is the January 31st low. That is at 74.09. Makes a retracement. Looks like probably about a 0.382 retracement this morning, gapping down into that 1.272 level, $61 and change. It wants lower price. It's going to come all the way back here to the last time where it had broken out in its last set of swing points, all the way back into the September 27th level, which will take you down probably to about 53.59. That is what the daily chart is showing. Let's go take a look at a weekly chart on this. The weekly chart, let me get rid of the A to B equals CD up here. Looks like the weekly chart ought to, and I'll refresh my screen, just make sure I've got all of the active and the proper volume bars out here. So as we take a look at this, it should find some decent support here. Let's draw the line across the screen. You can see this is an area here that has either held as a resistance area or a support area. Now, resistance, I'm going back into the time frame here of April of 2011, made a high of 55.66. That is the black line, made quite a three-river evening star, bearish engulfing extraordinaire. On that following week, that session being the week ended, May 6th out there, 2011. Then you can see as the equity moves back up into that area, and it does it here over a period of time stretching back from April of 2012, April 20th, 2012, all the way through July 13th, 2012. That is what's quite a few months here of area of resistance. So we know that was a strong resistance area. That's why you want to be able to draw those lines across the screen on your charts, because once you break out above resistance, that becomes support. It's going to be tested as support. That's why I say if you're not in the market, you're thinking that the market is going to be popping to the upside, you don't want to miss out on any move, wait until it gets up over resistance areas. And then what you can actually do, you can either go ahead and jump in there, and if you get a close below that, you would go ahead and close it out, or you can wait for the market to move back and test those areas. Take a look at Stratasys out here. Breaks above the resistance area on July 20th, does it with 3.3 million shares. That was getting up over a swing point that had 2.4, getting up over a swing point that had 2.4 as well back in April. So it gets over it with conviction. And once you get up over it, what does it eventually do? Well, it comes back and it tests that area on September 28th and tests that on the weekly chart with 3.6 million shares out there. It was coming in really hot the week of September 21st, but never got down to test that resistance area. Well, it was resistance and then became support. Tested that, and then it went ahead and took off to the upside. So you can do this on any time frame that you trade, any stock charts that are out there. Now what it's going to do, it's going to come back and it's going to test that area. So Stratasys says that it wants to come into about the 54 and change level, trading out at 61.91 right now. Let's go take a look at that stock that is just truly getting hammered out here. Let's go see what that is doing other than taking everyone to the cleaners. The ticker symbol is AFFY, which is Affimax Inc., down $13.90 with huge volume. Probably nobody down there. Let's see if this has taken everybody to cleaners. And it looks like it has. We'll come back. We'll take a look at Affimax. Right now, Dow's up 41, Composites up 16. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow up 50 points right now. Composite up 17. S&P's up 7. Small caps up $1.37 out there. Small caps acting a little weak here. Let's go back to AFFYMAX. AFFY is the ticker symbol. Got the monthly chart up on the screen here. Trading out at 268 right now. Nobody in this thing as in a profit position. This is a disgusting looking stock chart out here. Now, earlier, before we went to break, we were taking a look at just simply some resistance and support lines, horizontal resistance support. You can see on the monthly chart, I've got one drawn across the screen here, just natural areas where we see price just simply hold in its tracks out here. Now, you can see this equity going all the way back to the month of June 30th in 2010. Downdraft with 43 million shares for that month. What does the stock equity actually do? This goes back to June of 2010. Makes it back up into that area a couple years later, 2 years and several months, 4 months out there, as it makes a high in October of 2012. Gets up to a level of 27,740, 27.74, closes out at 22.79, setting up that area of resistance still. Even the next month out here, the following month, November 30th, let's say you didn't take your bread off the table, 15 million shares, so you even have lighter volume in the following month in November. Gets up to a high at 24.94, but closes at 24.44. Then you get the bearish signal out here. Get this reversal signal on the monthly chart, the month of December. That would have let you out of the equity even at the close at $18.99 versus $2.66 out there. Make sure that on all the stock charts that you are trading, you know where you have just natural lines of support or resistance, and watch the candle behavior, watch the volume behavior as you get up area. It's really too bad for all those folks that did not get out of this equity at least by the end of December in 2012. That is on AFI Max out here. Let's go see what we haven't taken a look at the Deutsche Bank chart. That's up 4.5%. So let's go delve into some of the financials out here. DB is the ticker symbol. Give me a moment here to put this up on the screen. Well, that didn't work. Now you have to give me an extra moment here to put it up on the screen. It is trading out. It gapped up $49.13. Let me go ahead and just erase this off of the screen here. So it's gapping up nicely, of course, because of the currency conversions. You can pretty much ignore all of the gaps on here. But let's go see if it's got a high volume high. The trading session before it made its high, so January 31st has 3.3 million shares out there, makes a little bit higher high with 2.3 million shares on the 1st of February, down with 2 million shares on February 4th, so not too bad. So far in trading today, 643,000. Looks like Deutsche Bank wants to get up and retest its highs out there, at least get into the trading session from January 31st out there, 51.30. It's trading at 49.13. So 51.30, anywhere between 51.30 to the highs of 53.12 should be on the horizon for Deutsche Bank. If we go take a look at, let's see, what else is moving anything big. You got Perrigo, PRGO is the ticker symbol. That is trading to the upside. Let's go see what's going on with this equities chart out here, gapping up today, so that looks pretty good. What's it going into? Well, it is taken out. It's gotten above a area of resistance, or it looks like it's trying to do that today. That just simply going to move this line right up here. This is where we had the gap down inside this equity. So this is trying to take out an area of resistance. That resistance low now, or support low, should be 114.77. That takes you back to November 6th. 2012. Well, folks, if you're off to start your day, have a great day. We'll look forward to seeing you in the morning. And remember this, always remember this, folks, you have an amazing power within yourself. And that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces. Most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks. Look forward to seeing you soon.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.